Erica Manian, Investor Relations, welcomed attendees to the GLBE Q1 2023 earnings call. Presenters included Amir/A, co-founder and CEO, Ofer Koren, CFO, and Nir Debbi, co-founder and president. Amir reviewed the business results, Ofer discussed financial results, and Nir provided an outlook for Q2 and FY 2023. Forward-looking statements were made, certain non-GAAP metrics discussed, and key performance indicators outlined. Now speaking, Amir/A, co-founder and chief executive officer. We achieved 55% year-over-year growth in GMV, which totaled $704 million, and 54% year-over-year growth in revenues to $117.6 million in Q1 of 2023. Additionally, our adjusted gross profit margin was 41.4%, up from 39.1% the same quarter last year, with adjusted EBITDA coming in at $14.5 million compared to only $3.3 million in Q1 of last year. We saw great interest in our services from brands around the globe, including renowned brands such as Carbon 38, Dune, Psycho Bunny, Maui, and Sons, Lulu's, Jigsaw, and Rebecca Minkoff, as well as the merchandise store of the Mercedes-AMG Petronas Formula One team. Furthermore, we pushed into APAC and launched our first Portuguese merchant. We also continued our efforts to expand our business with existing merchants and conducted proof-of-concept exercises to incorporate AI-powered tools across the organization. Now speaking, Ofer Koren, Chief Financial Officer. GLBE reported $704 million of GMV in Q1 2023, up 55% year-over-year. Total revenue was $117.6 million, up 54% year-over-year, with service fees revenues at $50.4 million, up 58%, and fulfillment services revenue at $67.3 million, up 52%. U.S. outbound revenue grew 100% year-over-year. Non-GAAP gross profit was $48.7 million, up 63%, representing a margin of 41.4%. R&D expense was $16.8 million, 14.3% of revenue. Sales and marketing expense was $10.5 million, 8.9% of revenue, excluding stock-based compensation, Shopify-related amortization expenses, and acquisition-related intangibles amortization. Adjusted EBITDA totaled $14.5 million, representing a 12.3% adjusted EBITDA margin. Q2 2023 GMV is expected to be in the range of $755 million to $785 million, 44.2% growth YoY. And revenue is expected to be in the range of $125 million to $130 million, 46.1% growth YoY. For 2023 full year, GLBE expects GMV to be in the range of $3.4 billion to $3.55 billion, 42% annual growth at midpoint of the range, and revenue to be in the range of $562 million to $590 million, 41% growth at midpoint of the range. Adjusted EBITDA is expected to be in the range of $70 million to $77 million. Goldman Sachs analyst Will Nance inquired, have you seen any changes in consumer spending in APAC? We've heard about shifts away from goods and toward services. Have you seen an impact from this? Additionally, what percentage of total revenue is APAC consumer and bound revenues? Ofer Koren replied, I have not observed any significant changes in APAC consumption. This market makes up a portion of our total sales, however Europe and the US still make up larger shares. There has been no change in consumer preferences from our side and overall, APAC. Goldman Sachs analyst Will Nance inquired, have you seen any changes in your macro outlook since the last quarter's call? What assumptions are you making for the rest of the year, and how do you explain the outperformance in Q1 compared to the rest of the year? Ofer Koren replied, in Q1 of 2020, we experienced better than expected macroeconomic conditions, evidenced by solid consumer demand and growth among existing clients. Despite this, the uncertainty remains and therefore our conservative projections for the next 3 quarters remain unchanged. Bank of America Merrill Lynch analyst Koji Ikeda inquired, have you seen healthy growth in the number of new merchants joining this year, and what have you factored into your guidance from a GMV or merchant expansion perspective? Nir Debbi replied, Koji, I'm optimistic for the rest of the year. To date, we've seen record success signing new merchants onto our platform and hope to continue that trend. Our pipeline remains robust despite any macroeconomic delays in budgeting and integration decisions, and we anticipate increased contributions by Q4 as Markets Pro goes into general availability. Bank of America Merrill Lynch analyst Koji Ikeda Inquired, can you explain how Global E is leveraging AI to drive faster ROI, improve customer onboarding, and enhance monetization? Amir/A replied, we are using AI-based tools to increase the quality, granularity and time to market of insights for our merchants. This will help drive better performance overall on our platform. We are also driving efficiencies across different functions in the organization, which will enable us to do more accurately with the same level of resources and drive further efficiency. Morgan Stanley analyst James Fawcett inquired, have U.S. growth of 100% year-over-year been driven by organic growth or the border-free acquisition, and what are your assumptions for the outlook of that region? Ofer Korn replied, I have seen strong organic growth, largely due to the momentum of our U.S. operations and an increase in direct-to-consumer and celebrity-endorsed brands. Additionally, Europe's stabilized environment has contributed to our growth, with Europe being the largest market for U.S. merchants. Morgan Stanley analyst James Fawcett inquired, can we accelerate the pace of penetration and onboarding with Shopify merchants to capitalize on the sizable GMV opportunity? What should our expectations be for this growth in 2023 and 2024? Nir Debby replied, Nir reported that Global E, a third-party solution provided in the Shopify native checkout, has been growing nicely since gaining exclusivity 1.5 years ago and is expected to continue to grow fast. In addition, Markets Pro, Shopify's own solution powered by Global E, is projected to start taking effect in Q4 following its U.S. general availability in the summer. The combination of both solutions is expected to result. Jefferies analyst Samad Samana inquired, have the assumptions for NRR, go-lives timing, and partnership ramp changed since the 1Q results were released, resulting in the guidance revision? Ofer Korn replied, we remain optimistic for the rest of the year, but due to macro uncertainty we are taking a conservative approach. In Q1, demand from consumers was more positive than initially expected, and projects with new merchants have been running on time with some usual delays. We have also rolled out newer products such as multi-local, which may be a source of further monetization in the future. Ofer Korn replied, we have seen progress across multiple areas, such as high adoption of our new duty drawback capabilities for European and U.S. merchants selling into Canada. This has led to an increase in the take rate. We anticipate an additional contribution coming from demand generation and our ability to drive traffic to sites in Q4 2020 and beyond, which should. Raymond James analyst Brian Peterson inquired, have customers of Snowflake, like Disney Europe and LVMH, been expanding their use of the platform earlier on in 2021? What have been the dynamics of land and expand in 2023 so far, with customers using multiple regions or focusing on land versus expand motions? Nir Debby replied, we have seen large merchants scale up and adopt a multi-local mode of operation, resulting in regional decision-making. This is especially true for larger groups such as LVMH, who share best practices and cooperate advice. We believe there is still much potential to land more large merchants over time, and we expect to see significant growth within these brands and groups. KeyBank Capital Markets analyst Josh Beck inquired, have there been any changes to Borderfree's integration into the platform? What opportunities are available related to fulfillment, and how should we think about synergies as the year progresses? Nir Debby replied, we have seen progress in realizing the goals of the Borderfree acquisition, such as developing demand generation capabilities and marketing assets, utilizing Pitney Bowes premium services to enter Canada, and leveraging the acquired professional team and services to accelerate Global E's roadmap. We expect these to fully materialize by 2024. KeyBank Capital Markets analyst Josh Beck inquired, what are the key objectives that need to be met during the early access process of Markets Pro for SMBs in order to ensure a successful launch later in the year? Nir Debby replied, we launched early access for Global E and Shopify in order to fine-tune our model and make sure that SMBs receive maximum benefit with minimal effort. We also use this time to improve the onboarding process so that general availability can be achieved without sacrificing any of the business benefits. Piper Sandler analyst Hannah Rudolph inquired, have luxury goods seen better than expected demand among existing customers and brands? Ofer Korn replied, I have observed stable sales in the luxury market this year. We have seen growth from gaining additional luxury brands and increasing our market share with current luxury clients. While mass market retailers experienced faster growth, luxury sales have not slowed down. Autonomous research analyst Matt Code inquired, have 100,000 merchants already adopted Shopify Markets or Shopify Markets Pro? What additional value-added services does Markets Pro provide to merchants, and how many of the 100,000 users do you believe could benefit from Markets Pro over time? Debbie replied, Shopify Markets Pro adds to Shopify Markets' full suite of services, making it seamless for merchants. It is still in early access in the US, with general availability expected in summer 2021. By 2024 to 2025, Shopify expects Markets Pro to reach significant numbers. Autonomous research analyst Matt Code inquired, can you provide more information on your biggest investment priorities and the expected growth in headcount and operating expenses throughout 2021? Amir/A replied, I continue to invest heavily in various growth trajectories, such as geographical expansion and developing our offerings around multi-local and additional services. We are also investing in areas like data and AI-driven technology to enhance value and insights we can offer our existing merchant base and potential new brands. This is all contributing to our growth trajectory. Amir/A replied, we are grateful to all who joined us today and look forward to our future earnings calls. We'd like to thank our hardworking team members around the world for their commitment to our merchants' success, which has helped drive our growth. Until next time, goodbye and take care.